that part of the show where we talk to our viewers and answer their portfolio queries. Today, I am joined by Samir Shah, Head Online Business Access Security. Samir, hi, good evening, and welcome to the show. And let's begin. We will take Mr. R. Venkateshwar Rao question. He's calling from Hyderabad. Hi, good evening, sir.
Good evening, madam. Good
Thank you
evening,
so much
madam.
for sending us your question. Hi, good evening, good evening. So you are investing in mutual funds by SIP since 2011 and
Yes.
you have UTI mid-cap. This SIP is discontinued, is that right?
Yeah, yes, madam. Right now, currently,
Access
I'm
long
investing
time
only in
is
9 funds.
also, yeah, I can see that. Access small cap, quant tax plan, Miro asset large and mid-cap. Um, You've got PGI mid-cap opportunity, quant large cap, Canara Rebecco, emerging equity, ICICI Proof, Wild Discovery. You've got Canara Rebecco, blue chip also. You have Motilal Oswal mid-cap. Okay, so too many funds,
Yes, madam.
Mr.
Currently,
Rao.
I'm investing in 9 funds, and my total
Yeah.
investment is 1,80,000 per month.
Okay. Okay. Did you get this recommendation from a financial planner, advisor, or anyone who recommended
No,
this to
madam.
you?
Actually, I see your program regularly, and in addition to
Okay.
that, I also verify various books and whatever
Sure.
funds are given 5-star ranking
Sure.
by various
Sure.
rating
Sure. Sure.
agencies. I go by that.
Sure. 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 Okay, sir.
So
So,
yeah.
so you are investing your entire pension, is that right?
No, apart from my pension, I have got some other incomes also because this entire money is not only my income, it is actually through various sources, like my HUF, my wife's income, and my income.
Okay.
All, through these three sources, whatever money we get, out of that, substantial portion of it is invested in
Got
this
it.
mutual funds.
Got it. Got it. So, sir, assuming that you are retired, your expenses are taken care of. We are not considering
Yes,
that
madam, that is
stress in
absolutely
this
no
planning.
problem. Yeah.
That's a brilliant part that you've done. I want to understand
Yeah.
how much of a risk can you take in equity now? I'm sure you are well versed with the nature of equity markets and the kind of volatility we
Yes.
have. Since you are retired, I want to understand for how long you want to be in this portfolio.
Actually, most of these investments are meant for my grandchildren, madam. So
Sure.
I am
Okay,
investing
lovely.
these amounts for a duration of at least 5 years. At least 5 years is no problem. I
Okay.
can invest up
Okay.
to 5 years,
Okay.
and even
Okay.
beyond that.
Sure.
But 5 years is
Okay.
minimum.
Sure. All right. So let's look into your funds. And Samir, it's over to you.
So, good evening, Kavita ji, and thank you so much for having me today on your show. So, Mr. Rao, first thing, we we have analyzed your portfolio. Kavita ji has already highlighted there are too many funds in your portfolio. Ideally, one should have 6 to 7 scheme in his portfolio. So
Yeah,
we are keeping that thing in mind, and we have provided our suggestion on your portfolio. Uh, First is there are certain scheme which you have already stopped, right? Those are generating a good return, but now you have already stopped. So suggestion is that as you are retired and I hope you are conservative, you are not you might not be ready with the to take a higher risk on your investment. So suggestion is that as such for for the retirees we generally suggest the exposure those scheme which has already generated a good amount of return. Ideally, that has to be moved gradually from equity to debt, hybrid, or passive funds. So suggestion would be that those which you have already stopped doing SIP, gradually you can transfer that funds from direct equity to passive fund like ETF, index fund, or maybe a hybrid fund. In hybrid, if you are ready to take risk, suggestion would be go for the aggressive hybrid fund. And if you wanted to take moderate risk, there are moderate hybrid fund is available, right? First is looking at your portfolio. What we found out is you have want flexi cap fund. See, quant is a really good fund right now. Generally, we suggest like no, it is a bit riskier and riskier fund. So and it is a performance driven. So generally, we recommend quant investment should be recommended to the investors who are in the earlier age of investment. So suggestion would be like no, you can replace your quant flexicap with Parag Parikh flexicap fund. Second is you have a two large cap fund. One is Malay large cap fund, and another is Canara Roboco blue chip fund. Suggestion is that we you should not have two large cap fund in your portfolio. Uh, Somewhere like no, it will definitely get overlap with each other, and it will have an impact on your return. So suggestion would be you can retain Canara Roboco blue chip fund, and Mirai Asset Large Cap Fund can be uh, discontinued. The the third suggestion is like no, if you Motilal Oswal Mid Cap Fund, you are doing SIP, which has which is a really good fund. Suggestion is to continue with that fund. Access Small Cap SIP, you can also continue with that. Uh, Now you have a context plan in your investment list. If you are planning to file your return in the new tax regime, then suggestion would be like no, you can replace quant tax plan with any flexicap fund. It has potential to generate higher return as compared to any tax plan ELSS fund. The third is as you are investing into various asset category, but I would suggest like no, we would recommend that you should have one fund which can give you diversification to international market also. So suggestion is that ICICI Prudential Nasdaq 100 Index Fund you can add in your SIP. And the last suggestion is you as you ICICI Prudential Value Discovery Fund, which is a really good performing fund. And I would suggest that instead of like no, you have already stopped doing SIP, or you have discontinued SIP in ICICI Prudential Discovery Fund. I would suggest like no, you can reinstate that SIP. It has potential to generate higher return. So now your new portfolio would look like your 1,80,000 can be parked in a following way. Canada Roboco Blue Chip
Mm-hmm.
Fund, you can do SIP of 40,000. Parag Parikh FlexiCap Fund
Okay.
30,000. Motilal Oswal 35,000. Access Small Cap 25,000. Quant, if
Sure.
you are not quant text plan, if you are not if you are taking a planning to invest in filing a tax in new regime, then 15,000. ICICI Prudential Nasdaq 100, 15,000, and ICICI Prudential Value Discovery 20,000. This could be your new portfolio.
Sure. All right. A detailed explanation given to you, Mr. Rao. Is there anything else you want to ask?
Yes, madam. That would be sufficient. Accordingly, I'll make changes.
Sure. All the best, sir. Uh,
Okay,
Samir,
madam. Thank you.
let's move on to Preet's question. And Preet also has too many funds in his portfolio. I don't have his entire financial plan in terms of goals, but then, yeah, funds he's given, and there are a lot of funds. Okay, so how would you like to begin, assuming that he's investing for 5 plus years?
Yeah. So what we have identified is like no, there are two small cap fund. Ideally, he should Preet should have only one small cap fund. If Preet is aggressive investor, then he should retain quant small cap fund. If he doesn't want to take high risk, then Nippon small he can continue with his Nippon small cap fund. The suggestion is to keep only one fund. The another thing is another observation is there are three mid cap fund, Access, Edelweiss, and Motilal Oswal. So to reduce overlap and streamline his portfolio, suggestion is to continue with only Motilal Oswal mid cap fund. Rest can be discontinued. The third observation is he has invested in sectorial fund, so he should have a proper exit strategy from sectorial fund. Now, as you said, like no, if we consider that if Preet is continue his SIP for 20 years, then this amount would be the accumulated corpus would be around 3.80 crores. And by doing a small tweak, like no, say if he increase his SIP by 10% every year, the corpus would be around 7.5 crore. So this is what our suggestion on his portfolio.
Okay, let's take Vipin's question now, Samir.
Yeah, yeah.
Okay, Vipin too has 8 funds in his portfolio, and he's been investing since last 7 years. That's what he says, and he also has closed SIPs about 1 lakh invested in Bandhan ELSS, ICICI, Nippon ELSS. Lock-in for each SIP is over, aiming for 2 CR in 10 years, and want to invest another one. I don't know now, 1 lakh it seems. Yeah, I think it looks like 1 lakh. Yeah.
So, Kavita ji, we have first. I will talk about his current portfolio. Vipin has invested in DSP midcap. Suggestion is that like no DS, he should discontinue that investment and reallocate that fund to a more stable midcap or diversified equity fund. So here suggestion would be either he can replace with Motilal Oswal fund. Second, he has Mirai Asset Emerging as well as Mirai Assets Large Cap Fund. So both fund are like has a lot of overlapping in portfolio. So it is advisable to retain only one. Preferably if he is a long term investor, then I would suggest like no go with Mirai Large Cap Fund. The third observation is that he has invested in excess long-term capital, long-term equity. That is a ELSS fund. If he has opted for a new tax regime, then I would suggest that he should discontinue this SIP and uh, this SIP can be replaced with the Parag Parekh FlexiCap fund or HDFC FlexiCap fund. Now, when we as he wanted to invest another 1 lakh, 1 lakh. The suggestion is that he should park 35% of this 1 lakh into excess blue chip fund, then 25% into SBI small cap fund, and the another remaining amount he can park with Motilal Oswal mid cap fund.
All right, so I think these are changes recommended to Vipin, and with that, it's time up on the show also today, Samir. Thank you so much for taking time out and helping our viewers with their financial portfolio queries. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.